Morning lads, we're just going to take a look at this mock question which required you to do the old, what they used to call it was a trading profit and loss and balance sheet. Okay, but now it's obviously called an income statement and a statement of the financial position of the firm. As I said in the post on Edmodo lads, I really think that this is a strong possibility of coming up this year in the long questions, which there are 3 of them and they carry a lot of marks, so it's important that you know this. So what we'll do this week is we'll concentrate on these and we'll get you working on a few of them during the week. Looking here, the first thing you have to look at lads is to understand where these items from the trial balance go. Now I know my class have done quite a few of these and we're just going to revise them with them, and I know a few other lads from other Mr. Horgan's class are watching in here, so hopefully you'll learn something from it. So first of all, looking down through it, at the top there you can see it says at the end of the financial year, which is the 31st of December 2019, the trial balance was taken from the books of JB's Computers Limited, and the authorised share capital is 200,000 of €1 ordinary shares, and then the following information was known at the end of the year. So you have a closing stock figure of 8,400. Now this closing stock figure will go into 2 separate accounts. The first account it will go into is your income statement. And then the second account that will go into is going to your statement of financial position. Alright, so that's why it's on the outside of the trial balance, because it goes to 2 places. The next thing you're looking at there then is depreciation. And the depreciation also goes into 2 places. The depreciation of equipment, which we'll get 12% of, and motor vehicles, which we'll get 10% of. They will go in to your income statement as an expense, but you also have to take them away then from your motor vehicles and equipment in your balance sheet, or as they call it now, the statement of financial position. Your purchase and sales will go into your income statement. Carriage inwards, income statement. Wages, light and heat, carriage out, insurance, advertisement, internet and telephone, long-term loan, will go into your income statement. Your bank will go into your statement of financial position. Opening stock will go into your income statement. Your debtors and creditors will go into your statement of financial position. Equipment, motor vehicles, premises, dividends, and your issued share capital of 150,000 will all go into your statement of financial position. Alright, so again that's very important that you understand where these things go. What I'll do for you now is I will do out the accounts for you here. Alright, and obviously with this you can pause it, stop it, and if you have any questions ads you can post them to me on Edmodo. Alright, so first thing, as I said, if you're looking down through there in the trial balance, the first thing you see there is you've got purchase and sales. So what I want you to do then is just take your sales figure. And you can, because there is no sales returns, you can post that 101,500 into the final column. The next thing we need to do then is we need to less our cost of sales. So less cost of sales. The things that go in here into cost of sales as, and I know at my class already you've got a handout on this, is opening stock, purchases, and purchase returns if there isn't a question, and carriage inwards and import duties are the only things you'll ever see in cost of sales. In this question here, we have opening stock, and the opening stock given to you in the question there was 2,200 into the middle column. You've got purchases in there beside sales, and that figure there is 38,000. And you also have carriage in, which is known as carriage inwards. And that figure there is €550. And the only other thing that you'll ever see in there, lads, is import or custom duties. We can add up these 3 figures here now, and that will give us 40,750. The next thing we need to do then, as always, is lesser closing stock. Your closing stock given to you at the top of the question there, lads, which I said goes into both into your income statement and your financial statement, okay, is 8,400. And you take that away because that is stock that you've left over at the end of the year which was not used as a sale. Okay, taking those figures away, lads, and you get 32,350. Okay, and the whole purpose of this was less our cost of sales. So we'll take this away from our sales. We get 69,150 euro. And that figure there, lads, is known as your gross profit. Okay, now, and the old course, that was known as your trading account. So that is your trading account done, which is the first part of your income statement. Okay, the next part of your income statement would be to add gains and lesser expenses. Now, in this question here, okay, there is no gains, okay, and it's very obvious when you do get gains. The gains will normally have something receivable written down beside it, usually like commission receivable, rent receivable, interest receivable. Okay, that's how you know that you have a gain. As you can see, we read down through the question at the start, and there was nothing there that was receivable, so we can make a correct assumption, okay, to assume that there is no receivable. So what we do here then is we less our expenses. Okay, now let's read down through the question again. The first thing you can see there, okay, is purchase sales has been taken care of, carriage inwards has been taken care of. The next thing that I said goes into the income statement was wages. And wages is an expense to a company. They must pay out their wages to their employees. Okay, it's usually the biggest expense for a company. Okay, and this here into the middle column is 37,000. All right, now after wages then we have light and heat, which is also an expense to a firm. Okay, and your light and heat there is 2,400. Okay, underneath light and heat then you've got carriage outwards, so this is also an expense. Carriage inwards is an expense, but it's a cost of sale. Where carriage outwards is an expense, but an expense in the less expenses portion of your income statement. Okay, which is 320 euro. Okay, underneath that then you've got insurance, which is an expense. Okay, the firm must pay a premium to an insurance company to insure their, whatever it may be, their motor vehicles or their premises. Okay, which is 1,500. Underneath that then you also have advertising, which is an expense. Okay, so paying a marketing firm to advertise your products, which is 3,200. Internet and telephone. I'm sure most of you have internet and telephone at home, which is an expense at the household, which would be the same for a company expense. Okay, so your internet and telephone there of 1,000 euro. All right, now the next thing we have there, as I told you, okay, if you look down through the rest of the trial balance, you can see there's nothing else that goes into the income statement. Okay, opening stock has been taken care of, debtors, creditors, bank, equipment, motor vehicles, premises, dividends, issue share capital, all. Okay, apart from dividends, okay, all the rest of it will go into your statement of financial position. Okay, but if you look back up to the top of the question outside the trial balance, you see depreciation there. And as I said at the start, that will go into two places. So it's going to go in here, and you're also going to take it away from your asset in the balance sheet. So the first thing we can do here is depreciate equipment. This is really easy, lads. Okay, the question tells you you depreciate equipment by 12%. So if you go back to the trial balance and you look for the figure for equipment, you see it's 22,000. So really simply then it's 22,000 and you multiply it by 12%. Okay, and you should get 2,640. Okay, you do the same then with your motor vehicles. Okay, which is 10%. And again, you just get the figure from your trial balance for motor vehicles, which is 15,000, and 10% of 15,000 is 1,500. You add those two figures together, okay, and you get 4,140 euro. And there's all your expenses. Add those expenses together, okay, and you will get 49,560 euro. All right. Now, it's less expenses, so you take those away from your gross profit, and you get 19,590 euro. Okay, and that figure now is known as your net profit. Okay, now what you do down here then is your dividends and your reserves will be taken care of here. Now in this question we've just been given dividends. Okay, there's been no reserves given, but sometimes it can give reserve, and if it is a positive reserve you add on, if it's a negative reserve you add or take away, and during the week I'm sure we'll come across that, so you'll see how we do it. But let's just deal with this question here today. So we're lesser at dividends. Dividends is money that you pay out to shareholders, okay, which is basically the slice of the pie that they give them, okay, because they invested in the company, so they must get some sort of profit back. So that's money coming out of the company, so you less it from your net profit, which will bring it down to 7,590 quid. And that 7,590 quid, lad, becomes your reserves at the end of the year. Okay, and that, lads, is your income statement taken care of. I don't really see it becoming any more difficult than that if this was to be asked in your junior cert, which I think is a high chance of doing. Okay, so that is your income statement for that question taken care of, the first part. All right, so what I'll do is I'll set up another one here now for you, and then we'll go on and do the statement of financial, or the financial statement. All right, so give me 1 sec there, lads. All right, so here with the balance sheet, lads, okay, it's very important that you understand the headings and know the headings, okay? And there's 4 main headings that you need to know, and they are fixed assets, current assets, less creditors falling due in the year, and then if you got your finance by section, which also has credits falling due after more than a year. But again, if you keep on top of these this week, lads, by the end of the week you should have no problem with the headings. So the first heading you have here is fixed assets. Now what is a fixed asset? A fixed asset is something that you own, so the company owns it for more than a year. Okay, so it's a long-term asset, so you own it for more than a year. And the only 2 things from the question, okay, sorry, 3 things from the question that we own for more than a year. If you look back to the question, you can see there that you've got premises, motor vehicles, and equipment. So those are the 3 assets that you would have for more than a year. All right, so you can put in premises here. Okay, motor vehicles. Okay, and what was the other thing? Equipment. Now, watch up here closely, lads. In the first column for the fixed assets, you've got cost. Okay, then you've got depreciation, and then in short, then net book value. And as I said, lads, the depreciation goes into 2 places, so this is where it goes. So if you look at premises first of all, okay, it's 110,000, and it wasn't depreciated, so it stays as 110,000. And depreciation, lads, is to diminish the worth of an asset, because due to wear and tear over time it loses value. The motor vehicles given to us in the question was 15,000, and if you remember correctly, we depreciated that by 1,500. You take that 1,500 from the 15,000 and you get 13,500. Okay, so that's what you have the vehicles worth now, 13,500 at the end of the year. The equipment was 22,000. The previous question, lads, we depreciated and got 2,640. You take that away from 22,000 and you get 19,360. So that's what you have the equipment worth out now. So that's the fixed assets taken care of, nice and easy. Okay, we'll close off these 2. So you put a double line because we will not need them. But we do add the figures up because you do get marks for it. Okay, and that's 147,000. Okay, and the total depreciation was 4,140. And your net book value now is 142,860. Okay, and that's your fixed assets taken care of. Again, anything that you would own as a company for more than a year. So the next heading then, lads, okay, is current assets. Okay, current assets then, lads, are something that you own as a company for less than a year. Okay, so if you were to go back here to the question, okay, and as I said, if you go to the very top and look at closing stock again, okay, I said it goes into two places, and here's the second place it goes. Closing stock is stock that you own at the end of the year. Would you have it for more than a year? Usually, okay, more than likely, you would not have it for more than a year, okay, because you'd be selling it in the new year. So you would own it for the short term. Okay, so that's 8,400. All right, working your way down then, okay, and you can see there, bank. So that's money that you have sitting in your bank account. Now be very careful with bank. If it's in the debit column, which is in this case, it's an asset, okay, but it can also be in the credit column, which would be a liability, which would be an overdraft, which means you owe the money back to the bank. Therefore, you do not own it, you owe it. And that's the difference between an asset and liability. So in this question here, the bank 24,600 is in the debit column, which means it's an asset, which means you own it. So you can put in here bank, okay, of 24,600. All right. Is there any other assets that we have? Okay, debtors. Okay, so are always an asset, gents. So debtors here in this question is 5,000 euro. So what is a debtor? A debtor, okay, is a customer or a client of yours that owes you money. Okay, and because they owe you money, all right, you can consider them as an asset because it's money due to you. So anytime there's money due to you, consider that as an asset. Okay, in this question, gents, they're the only three current assets that you have. So what we can do is we can add those up and we get 38,000. Okay. Now, the next heading, okay, is less creditors. Okay, in brackets then you can have less than 1 year. Now on the old course they were called less current liabilities. And a current liability, okay, is when you owe money to someone or to something else. Okay, so you don't own it, you owe it. So therefore it's a creditor falling due within a year. And again, it's a short-term liability. So people that you owe money to within the next year. The first one you can safely assume that's always going to be in here, lads, is creditors, since it's in the heading. Okay, it's always beside your debtors in your balance sheet, and your creditors is 2,770. Is that right? Okay, so it's 2,770. Now, in this particular question, that's the only time that you have a creditor, or sorry, a current liability. In other questions, you may have a bank overdraft, okay, or you might have something due. And if you have something due, okay, it would be a current liability. So really what I could have done there is I could have, because there's only one, I can move that over into this middle column here, which is 2,770. And I can take that away from my current assets, okay, and you get 35,000. I'll do it down here. 35,230. And that figure there, lads, okay, and I'll write that in a different colour because it's an important figure. I'll write it in green. That there is a working capital. And for putting down the term working capital in the exam, you get a mark. Okay, so that's a very important term, working capital. And you'll see why it's very important now shortly. Now, because your working capital is a positive figure, you'll add that on to your fixed assets. So this 142,860, okay, you will add those two figures together, okay, and that will give you 178,090. And that figure then, okay, is known as your total net assets. Okay, and that's the last time you'll be adding or anything from that figure. So you can close it off with your double line. Now we're nearly there to the last section, lads, of this statement. So we've got our finance by. Basically it means what your company or how your company is financed. And the first way your company is financed, lads, is with your share capital. Okay, and if you notice at the start of the question, okay, you said you had authorized. Now it's very important that you do this, lads, because you get marks for this. So authorized in this column and issued in the middle column. So authorized was 200,000, which means that the shareholders have authorized you to issue 200,000 euro worth of shares, but you've only issued, if you look at the last line of the trial balance, 150,000. Okay, you get marks for both of those figures, lads, so very important that you put it there. How else are you financed? Well, you're financed by your reserves, and we got the reserves in the previous question. If you look up there, in the previous question, your reserves at the end of the year was 7590. So we'll put in that 7590. Okay, and just to be sure, in case people didn't understand where I got that figure from, it's that figure there, 7590. Okay, that's the figure that I want down in my finance by. Alright, now, the next heading and the final heading, okay, is creditors falling due greater than 1 year. This is normally a long-term loan of some description. Okay, and in the question we've been given a loan to finance it. Okay, but that has to be paid back to the bank, hence why let's say long-term liability. And the long-term loan there, lads, was 20,500. Now, when I add those three figures together, lads, I will get 178090. I can close that off, and as you can see, lads, if you look closely here, my total net assets equals this figure here, and this figure here, lads, is called your capital employed. Okay? And that's how you know if you've done your balance sheet correctly, if they balance off, hence why it's called a balance sheet in the old course. Okay, now I know it's called a statement of financial position. Alright? Now, we'll keep going and we'll just finish off this question here, lads. Now, the last part of this question was looking at the accounts you completed for JB's Computers Limited. Comment on the liquidity of the business and give a reason for your answer. Now, I know I haven't done this yet with my class, okay? But this is a ratio section, okay? And there's a chapter on it. And basically what you would do is you would carry out the liquidity ratios. Now, by the end of the week, this week, lads, I'll do a little workshop on you for ratios and show you how you use them. For the meantime, we'll just concentrate on the account itself. Alright? So what I'll do, lads, is I'm going to post another question for you as well with this solution for you. Alright? And then get you working on that. And I'll give you 2 days to do it. And then Wednesday, I'll come back and do the solutions for the question. And then give you another question too for Friday. Okay? So keep on top of the work, lads. And keep yourselves safe. Well done.